Good morning, guys. This is Xtrahot Forex. I hope everyone is doing great. And it's Wednesday. What's really happening? The market is still going crazy. So we just going to try a different topic and just to talk about the market. I hope you already saw the topic or the title of this video. So besides that, don't forget to smash that subscribe button, like, share with your friends. Guys, this is a very good thing. We just reached 8K subscribers, so thank you very much for whoever who actually subscribed to the channel. So that's why we just need to talk about the reality of forex trading or trading in general, right? So before we continue, this is gonna last for the whole month or maybe even two. So what we have there, you can see that those are our services. So whoever who's going to join our 12-month subscription or VIP signals and also lifetime signals, you are also going to get our system, our indicator, right? Or system indicator. So yeah, you are going to get that. But if you want the system alone, it's actually $60. So which means when you join 12 months or lifetime, you also get this system for free. So I think I will be I will be continuing updating you about this. So how does it work? Before we go on the actual program of the day. So I think I already opened that. So this system, it's quite straightforward. It's simple. What's really happening is it predicts the whole movement. But this movement, actually, it analyzes the way the market, the trend of the structure, and it tries to predict what might happen. And that is actually what it does, because when we do the analysis, we actually want to see what might happen next. And then it puts that into candlesticks. So it doesn't really tell you where to buy, but you will understand that, oh, maybe in the next 4 hours, I will see the market going higher like that. Do you see that? I hope you see this. I hope you see this. You can see that the market is going higher. And that's what we actually expecting. At the moment, we expect the market to go up. You see that? So this is what I like about this indicator. It doesn't really actually try to confuse you with previous movements that happened. No, it just tells you what it thinks, and most likely it will connect with the previous trend that you have, and then you will have a clear view of what might happen. And yes, it works very nice. It works very nice. You won't get confused. So let's see other ones. Let's see, maybe for those who like to trade in Nasdaq, what do we expect? You can see that on 4 hours time frame, we expecting a nice reversal before we see a continuation of that push. Remember, this is a 4 hours time frame. This is what it sees the market. And if you try to connect that, at the end of the day, it makes sense. So these candlesticks are not actually there on your chart if you check now, but it's what is going to predict. And if you know how to do your own thing, if you know how to, even if you don't really know how to analyze, then you will actually see what might happen in the next days or next few hours according to what's really happening. Remember, when we do our analysis, we actually connect with the previous structures. So it does that automatically for you. You see. So let's check another pair, maybe US30. Let's see what US30. This is what I like about US30. So US30, where it is, if you saw a Nasdaq 100, S&P 500, they are going up. They are all pushing to the upside. And US30 is still playing around. And you see what's really happening here. It predicts that the market will end up breaking out of that structure. We will be going on that analysis later on this video. So we expect the market to break out and continue to go to the upside. That's what this system works. So we have everything. You can actually analyze everything here. So this system is only $60. But if you want to join like a lifetime signals, 12 months signals, you also get the system. So yeah. Don't say I did not really tell you. And when you join, this is just for appreciation. When you join our lifetime subscription, guys, you also get mentorship. So that mentorship is just going to be there to assist everyone to understand about the market. So now when we go back on the market, if you can check here, I have prepared only 10 points for everyone. So I will just write them here when I talk about that working that topic, right? So why? Because the market, when I check the market, guys, there is nothing much that we can talk about. Yes, the market is still moving here and there, but if you checked my analysis yesterday, they are just the same. The market is not moving that crazy. So I will just, I'm not gonna go on this with in a row. I will just pick any point. So the first one is gonna be market volatility. You see, so when we talk about market volatility, guys, we're talking about the way the market moves. You can even see here how the market was moving. You can easily see how the market was moving here, that it was normal. So because around these levels, we had actually economic news. We had NFP, we had CPI, we had FOMC, right? So that creates these crazy moves. And at the end of the day, it's easier to make money or you can easily lose, you see. By understanding those news, it makes your job to be way too clearer. And when we expect the news, you can stay out of the market. And another problem with that is when we don't really have enough economic news in the market tends to move quite slower. You can see after FOMC, the market started to move quite slower. We had a breakout. Now the market is coming back here. Why? There are so many things happening in the market. And if we have geopolitics, we have this economic news, at the end of the day, the market gets confused because let's say in a week we have positive news, we have negative, we have positive. So at the end of the day, that will affect the volatility of the market, and we're gonna have this type of moves where the market is just going to range. And if you start to understand that, you will know that yes, there are going to be some weeks where the market is not going to move very nice. And thus you will understand this volatility, that there's other weeks where the market is going to be just quite slow, quite slower, or quite very slow, or maybe the structures won't be the way that you understand. We have a breakout, the market is coming back, and you see that no, man, if you continue trying to take some trades, you end up losing. So that is understanding the market volatility during this time. You might have a different explanation on that, but my point here is this time, this volatility that we have, the market is going up, down, reversing, consolidating. At the end of the day, you might end up losing, or sometimes we don't really have some trades. Like this week and last week, I see that we did have some very few trades, even though we did smash a Nasdaq on Monday. But when we check other pairs, they're not actually moving anywhere. You see, let me show you this maybe on US30. I think you will see that US30, it's moving crazy, guys. Where is US30? Yeah, here's US30. You can see that we have US30. It's been just consolidating. So this is what happens when we have this crazy economic news left and right. We have NFP, we had CPI, we had FOMC. I think yesterday we had retail sales. Some they are positive, negative, whatever. So they end up affecting the way the market moves. You can see here the market was just moving nicely. What we have here, it's quite crazy. But the problem is, if you don't really have that patience, you might end up just trying to trade unnecessarily. And at the end of the day, you end up losing. You see, just because you just want to trade. Remember, this topic is actually the realities of trading the market. So another thing, as I said, I will just go through these topics. I will just go straight to emotional discipline. So during times like this, where we see the market going up and down, most likely the problem is, since we have this community of trading, some people at that time where you don't really trade, like let's say we don't really have trades here on US30, what's really happening is when you check other people on the other side, or maybe on social media, you find them making money. But when you go on the market, you don't really see proper structures that you're supposed to follow. What's really happening? You're not longer going to have that discipline. If you are not disciplined, you're just going to create some structures that are not really there. You end up just trading unnecessarily. So another thing that you should know, that being disciplined, it will help you to have certain strict rules, even though it seems like you're not going to make money around that time, you see. Sometimes you just need to stay out. That is discipline, waiting for the market to do certain or to confirm with certain areas. That is discipline. Do you have that? Maybe no, maybe yes, but you should understand that there are those times. Just look at this. Just imagine if you were just trading US30 only. What was going to happen there? You see, or before we talk about, maybe before we jump deeply on the realities of trading, remember, trading, it's totally, to me, it's just business. Like business, right? So which means you are actually there to make money. And the problem with that is people who trade most of the time, let's say 90% of people who trade, they have responsibilities. So when you have responsibilities, one way or another, you are forced, or you are forced to have these goals or targets that you need to meet, so that you have to pay or you have to make sure that you take care of your responsibilities. So if maybe you are using Forex as a means to cover your responsibilities, obviously one way or another, you will try to make sure that you make money, and you will try to find some opportunities, even though sometimes they are not there. When they are not there, like now, it's a problem, because remember, you have responsibilities. So it makes this too much emotions, where it seems like, no, how should I wait, because I need to make money so that I can pay for this and that. You see that? So at the end of the day, you end up having these emotions. And at the end of the day, just because we watch people making money left and right, we think like, why am I not seeing something? Maybe I need something. Then you end up trading unnecessarily and you end up losing. So you should have that discipline, that even though, yes, this is the source of your income, maybe, or you want to make this as a source of your income, just know that it's not going to be an opportunity day or trading day every day. Not every day it's a trading day. You can have like 2 signals or profitable signals in a week. So imagine in a month. So it means it's gonna be few. You see. So if you can think about that, you'll start to realize that, yeah, we are not forced to have signals now and then. And maybe that way you will start to go slower, even though you have some stuff to cover, right? So that was actually trying to explain emotional discipline. Another one is education and research. Education and research. So education and research, it's actually try to keep up with the market, try to learn, try to understand what's really happening on the market, try to understand inflations, what's really happening with inflations. We have a stronger dollar, and we at the same time, we can easily see that, no, man, gold, it's also these days is not respecting whatever that we see with the dollar. Mostly, or previously, when the dollar is going up or US dollar is going up, we knew very well that gold will be going down. These days is different, but it's not actually these days. We can easily say, just because the situations that we have at the moment, we have geopolitics, all those things, they have an effect. So you should understand, and with that, it means if you have a strategy, you have to modify your strategy. Why? Because the markets actually evolve over time. They will adapt to new things, they will adapt to new situations, and with that, it means your strategy should slowly also evolve or change, you see. So, but if you stick to one thing, you don't really want to see any change, you want to trade, you force yourself to see things that are not there, you don't really follow the news, whatever that is happening, then you're going to have problems, you see. You're going to have problems. So there are so many things that I obviously I can't cover everything, but you know that you're supposed to learn. Firstly, be disciplined. Those are the things that you should know. And on that discipline, just know that, okay, on my strategy, I have this. I will change these things over time. I will change this according to this. And then I will try to be disciplined and follow whatever that it's currently happening. You see. Sometimes we stick to the wrong things. Yes, they were working before, but maybe now they're no longer working. So try to change that. Don't change the overall strategy, but you can change only 5% of that. Because even though the market is changing, not everything is changing. We still have trends. You see, we still have so much stuff. So another one, I will jump straight to broker selection. Yeah, we have so many brokers. So you should understand that not every broker is going to be your friends or your friend, right? So which means there are brokers that they have swaps, they are not registered. There's so much stuff that is happening with the brokers. And once you go on the broker, just understand it's quite similar to bank accounts. So you can't just go and try to open a pro account, a professional account or something like that, because there are some stuff that you don't really understand on that account. There are some charges that they're going to charge you for you to have that greater service. If maybe there's different, let's say that's why the broker have like 3 different types of accounts. Some mostly is going to be standard. Standard is mostly for general. So which means mostly on that is just higher spread. They don't really charge commissions. They will say, oh, there is swaps 1, 2, 3. You see. So you should understand that. But on the pro, that maybe it might be very small spreads, but maybe they will take some commission, which means they will take a percentage, because they're reducing the spread, right? So it means if you just that person who just trade non-stop, you opening 10 positions, just imagine when they take those commissions. You might make a profit, but they will still, when you check the profit, maybe let's say you made $100, but when you check the profit, it's actually $60. When you check, it's the commission. When you hold trades overnight, there are swaps. Some brokers, they just go crazy. Sometimes they are not registered. And when you check that, make sure that your broker actually, it's something that is not going to give you some stress. Make sure that you don't really get these aggressive brokers. There's these brokers where maybe they just want people with enough money. So if you don't really have enough money, then that's the problem. Let's say maybe you want to trade Nasdaq. So on Nasdaq, on other brokers that I see, you can see that they have this micro lots or mini lots, not standard lots. So which means you can easily trade with smaller amount and without any bigger problem. But there's other ones, 0.01, they treat that as a standard lot, especially when you trade US30s, Nasdaqs, and let's say indexes or indices, right? So you should understand that and don't just choose and say, oh, I just want a pro. No, understand that. Regulation, maybe if the brokers are regulated and stuff like that, you should check that. But the best thing that I can say is, if you want to choose a broker, just check these international brokers. Most of them, they are well regulated. Simple as that. But these pop-up brokers that just start now and then, that's the problem, you see. So let me go to another one. So risk management. On the risk management, I think we all understand risk management. It's applying risk actually on every trade that you take. But do you follow that? Do you have the rules for your risk management? Can you explain your risk management? And those things, they sound easy. And I think that is the problem, because they are easy. If I can say, what's your risk management? You can say, I will apply the stop loss. Okay? Is that all? Mostly I hear people saying that. And I think that it's good. I'm not saying it's bad, but I think it's not really enough, because I think risk management on my side, I think it's almost more than 50% of your success rate. Why? Because when you go on the market and if you don't really have a solid and fixed risk management, it means that you don't really have power over the loss that you are going to make. So when you go on the market, and these are the stuff that I teach on my mentorship. So when you go on the market, you should choose for the market what you are willing to give. Let's say maybe you have, let's say you have a 1K account. 1K account. So how much are you willing on this account? You can say, okay, I'm willing to lose $10 each. So which means my stop loss here is going to be $10 every time I go on the market. I'm not going to adjust that. So let's say something like that. So you fixed on that. So which means if you make money, it's unlimited. You can make whatever that you want. But when the market is going against you, it's limited to this amount. But for those people who just say, Kenzo, you know what, the market might reverse, they end up adjusting. So now you no longer have enough power to have a fixed loss. Now it means today you might lose $30, tomorrow, whatever, because you don't really have a clear strategy how you approach your losses. There is this theory that says, oh, Nasdaq always reverses, man. Hey, 1, 2, 3, 1, 2, 3. I don't really place my stop losses and stuff like that. Yeah, but we know very well that there are days where the market breaks everything and just moves aggressively. So will you able to handle that? I feel like it's better to lose $10, let's say $10, than to hold a negative $100 or more in the name of saying, no, this thing will reverse. So have a fixed amount. So I think the simpler part is, or the simpler way is to say, you should able to give the market a smaller piece of the pie, and you know that you're gonna take the whole, the other piece. So you give it, you just choose this amount, and you know that when you make money, you're gonna maybe lock your profits, adjusting or keep trailing that. At the end of the day, you make more than that $10. And every time you risk that $10, it means you have a limit. But when you don't really have a limit, then the market will just control itself over your account. So have a proper risk management. So risk management, it can also be a way much longer topic. Trading strategies. So trading strategies is also one of the stuff that I see that people struggle with. And I think people underestimate this, because having a strategy, it means you having a direction. So if you have multiple strategies, even if it's 2 or 3, it's a problem, because at the end of the day, you don't really know which one should I just focus at, which strategy should I use at this on this pair. You see, you have moving averages, and you also use trend lines. The moving average is telling you that, oh, it's already a breakout, or maybe it's reversing, but the trend still tells you that, no, this thing's still on an uptrend. What will you do? So I think a strategy, mostly people fail on this, because I can see that the problem of accessing or able to have this access to indicators, I think that is the problem, because at the end of the day, you'll have stochastics around this area moving like that, or RSIs, moving averages, doing their own thing there. And we also have Fibonacci and stuff. At the end of the day, which one are you following? You see? So it's like having different navigators that approaches the market in a different way. Maybe you have a compass here, you have a navigator here, and you have a map here. So at the end of the day, you're just going to delay whatever that you're going to do. So they're all trying to tell you the same thing, but in a different language or in a different approach. So you should have a solid and simple way of approaching the market. So on my simple way of explaining my strategy, and this should be for everyone, I guess. So if you can ask me, what's your strategy? My strategy is quite simple. It's just trend following or trend trading strategy. So which means I follow the trend. If the trend is going up, if you can see this is going up, actually I follow that. I will look for buy positions going up like that. If we see a breakout, then I will start to look for sell positions. Simple as that. Yes, we can still go deeper on this and say, I will try to find where I can actually buy if we are on an uptrend, because I can't just buy anywhere. But I follow the trends, which means I don't really go against the trends. Simple as that. But if you say, oh, I wait for this candlestick to do this, engulfing candlestick or superstar candlestick or whatever, candlesticks pattern, whatever, you mixing all this thing, my moving average, exponential, whatever, then you have a problem. Have it clear. If you can't explain your strategy within a minute or 30 seconds, then you have a problem. Because already the market is confusing. So if you add some confusions on top of that, then yeah, you are in trouble. So another one is going to be demo trading. I think demo trading sometimes is into two, obviously. So because sometimes you can't have enough emotions trading on a demo, but it's also a good tool to use, actually. It's also it will teach you how, if maybe you want to learn how a US30 moves, you can with the demo. You will see how it reverses, you will see how, but the problem is when people go on a demo, they go in there not to practice, they are actually focusing on the amount. That's where we disconnect with the emotions, because yeah, on the demo, the money is too much. It's not yours, it's not a paper account. The disconnect come from that. But if you are there on a demo to learn the market structure, the market movement, to me, it's just the same. Demo account is just the same as real trading. Why? Because if you are focusing on the market structures, breakout, retest, all those things, support and resistance, it means you will be getting the same value, the same that you're going to get on the real account. But your problem or your mind is on the money, on the numbers. You are looking at that 100K and you say, you know what, I can just risk the way I want. But the question is, when you were risking there, you used a bigger lot size or whatever, were you also following a certain strategy? Are you following some structures that you can say, I don't really feel that? Because you can easily see that, okay, I bought here, I lost. It means that market structure was not, I was actually wrong. If you use it like that, to me, you're going to benefit. To me, you're going to benefit. Okay, so let's push to the next one. Psychological challenges. Actually, when we talk about psychological challenges, it's where we talk about stuff like FOMO, fear of missing out. We see people making thousands, we see people buying cars, everything, and you are this under pressure. And at the end of the day, you have maybe, when we start, we have this approach that, you know what, I'm going to follow the rules, I'm not going to follow that and follow that. But at the end of the day, we have this influence from the social media or maybe other stuff that makes you feel like you're not enough, you're not doing better. Things can happen within a week, you see. And that is a problem. That is a problem because at the end of the day, that seems like you're not moving anywhere. You're not going very quick. You see, some people, they trade gold, you trade Nasdaq. Just because people making money on gold, you start to think about trying gold. You're gonna pay. You see, so try to stay on your own lane. I think the most answer for this, I can say, try to stay on your own lane. Maybe try to limit social media. You can still have social media, but if you are a trader, try to cut other traders or maybe people who maybe show you those things, right? Try to cut those things out and see maybe if you follow yourself, if you follow your rules, what will happen? You see. And see if you follow your own strategies, try to backtest everything, what will you get? You see. You will start to realize that making only $10, it's something. Because sometimes with social media, you can still make 1,000. But just because there's people who making 10 times that, whatever that you made, you're not going to appreciate that. Even if you are doing good, you're not going to appreciate that. You see. And you will just keep chasing. We keep chasing just because we don't really know where we're going. We're just following different people. Those people, maybe they have their fixed goals, then you don't really have, because you just follow different people. So yeah, that's good to follow people, but learn some good stuff there. So long-term perspective, I thought maybe I was going to edit this video, but it's 30 minutes now. So to edit this video is going to take longer. I'm not going to edit this one. So long-term perspective. So I think the best thing that I know that is happening is get rich quick scheme. Thinking about getting rich very quick. That is the problem, because who actually got rich very quick? No one. People that we're trying to follow, they did not really get rich very quick. But just because they showing us the result, they don't really show us the process. Maybe because when the process or whatever that they were doing, when they were still trying to get there, they were not out there. Once they reach there, it's where you start to see them. Then you feel like, oh, they started from here. No, you started knowing them from that point, but they've been there quite longer. You see. So I think, yes, you can get rich very quick, especially in trading, but within maybe, let's say, within 5 years, or let's say maybe, because if we talk about like seriously rich or getting rich, when you start a business, we can say anything that has to do with maybe more than 7 years going upwards, it's where people get richer. But real businesses take 5 years to make even a profit. I was reading about Takealot. I think they've been operating for more than 10 years without making any actual any profit. There are so many businesses. Amazon, if you do check Amazon, they did go for more than 15 years or more than 10 years without making any profit. You see. And at the end of the day, once they start to make profit, it's where people start to try to copy that. It's a problem, because now you're copying the result. You don't really copy the process. So, but if you copy the process, that is going to be a different story. You see. So it takes time. Just know that it takes time. It takes time. And yeah, it takes time. And the best thing that you can do is to try to see things in a different way and say, you know what, even if I make it in 5 years, it's still very good. Just imagine 5 years ago, if we check from now on, from today and going back to 2020 or 2019, you can see that there is nothing much of a change. There is a change, but nothing of a bigger thing. But if you check, it was 5 years. So which means if you don't really have a solid plan now, we might reach 5 years in few years, and when you check, you did not really achieve anything, because you are busy chasing this get rich quick scheme instead of chasing the process. It takes time, you see. So I don't know if maybe I missed something on my list. So let me check. Leverage and risk. So on the leverage and risks, since I'm a mentor and I have different people that I meet, I can see people over leverage or over risking. There is this trend where people maybe open, like say 10 positions. There are some serious reasons behind that. So don't just open 10 positions at once without any reason. Yes, but you can still open 10 positions if maybe we are trailing the profits. You can open a buy here, it goes in profit, open another one there, open another one. So that it's clear, just because it means every position that you open, you already have the other one in profit. So it means it's no longer a risk. You can even log that one. But just opening 10 at the same time there, sometimes it doesn't really make sense, but there is some other reasons behind that. But if you are a newbie or someone who is still new, trying just to do that without any proper reasoning, you just over-risking. You see. But I understand why people open with multiple positions. They can open here. Once you got in profit, they can close few positions and leave the other one running, close the other ones and leave the other one running. Mostly that is the main reason. But just opening here without proper reason, you're just using a bigger lot size. Maybe your account can't keep up with that. And most likely is you might feel like you don't really know how to trade. But it's because maybe you're over-risking. Once the market reverses, then you're out. You see. And when you check, you're out even before the market reaching the support area. you see, because you're over risking. So, but beside that, guys, I feel like let's try to learn. Let's try to learn. And I think for this video is quite long. And you know what? I just want to thank my people who actually joined this channel. And for everyone who watched up to this point, thank you very much, guys. And we are on 8K and we're still gonna grow. So the target at the moment for the end of the year is 10K. Not much, not much. So now let's go actually on this. Let's go on our analysis, quick analysis, just to see what's really happening. Already the video is very long. So on DXY, we can easily see that now, man, the market is still on that uptrend. You can see here. So the market at the moment is still trying to play around this area of resistance. Do you see that? This is an area of resistance. It seems like the market is trying to go lower. So this will just create a more confusion on the market. On the other pairs, but we can see that we had a breakout. Now the market is going down. The question is, will the market even reach this support area? It's up to the market, but what we know is this will actually create other mess on other pairs, right? Because now it was going up, now dollar is going down, right? So AUD, I think we smashed this one very nice. We had a very nice pending order. I hope everyone did close their orders at the moment. We had a nice buy here. The market is pushing up. So even though we had some tricky week, yes, somewhere we still eat. So this was a very nice straightforward. We can see that this was a very nice support area. That's why we had that buy. So we are on a very nice profit. So on USD JPY, the market is still struggling around this resistance area. You can see the market is still on that a nice uptrend, but with this type of resistance, so it shows us that the market doesn't really want to go down, but still around, it can actually break this area. So maybe the market might reverse, it's possible, or maybe the market might end up breaking. I think this week, on tomorrow, on Thursday, we have JPY interest rates. So there is a chance to see a crazy move from this area, whether the market will reverse or maybe the market will go up. So we have to be extra careful. So at the moment, we can't do anything on that. So GBPUSD, what's really happening? If you still remember, we are coming from that downtrend structure. Now, I was expecting to see a very nice bullish move. Yes, the market did reverse. And at the end of the day, I did tell my people that this area is a potential support area. And it seems like slowly the market is trying to go even higher. So let's expect, I'm expecting that to continue going even higher. So yeah, but the market actually took time. But these are currency pairs and we have some economic news left and right. So we have this consolidation. But at the end of the day, the market might actually show us that it's actually on a very nice uptrend, as I'm expecting to see the market continue to that uptrend. So Euro USD, you can easily see that the structure here, it seems to be trying to reverse. But the overall structure on my side, on the daily time frame, we can easily see that, yes, the market has been going down. So at the moment, we will see what will happen. But if we go on a 4-hour time frame, this time frame, to me, yeah, we did have this breakout. You can see it was a nice uptrend. Now the market seems to be on this nice downtrend. But on the overall, this is the daily time frame that shows us that the overall structure is actually on a downtrend. But I'm expecting to see a nice reversal on this, but it's going to be tricky for us just to jump on the market. But if you are part of the team, don't worry, I will update you. So it's not only for our premium members only. We also have free group. Check my description. You can just subscribe in that. It's free. So sometimes, yes, I will send some signals in there. So on gold, now we have a nice support area around this level. You can see that. So I'm expecting to see a nice push like that. I did talk about that maybe for this whole week. I'm expecting to see a nice continuation of that buy. But here, the market is actually showing us that this is a support area. On top there, we also have a nice resistance. So I think we might see this consolidation continuing like that. I think the market is trying to rest around this area, and I think we're gonna see a nice push maybe before we see aggressive push to the lower side, as we know that there are some chances that they're gonna cut the rates, but it seems like it's no longer promising that much. But I'm expecting to see something like this to happen as we saw those moves happened before. You see here, we also had that. Even here, I think we might have the same thing, but we need to think outside the box and see what might happen. Yes, I'm still actually bullish on gold. So when we go on the other ones, yeah, this video is very long, but it's fine for those who actually want some information. This is for you. US30, we can easily see that yes, the market is actually doing some very nice moves. Previously, it was making some very great moves, but now we can easily see that the market is actually consolidating. And once the market is consolidating like this, it's difficult for us just to jump in the market, right? So we will see. But on that indicator, it shows us that the market might break out here and start to continue. And it's possible because we already saw Nasdaq doing that. So now we are going on Nasdaq. I'm trying to be as quick as possible. Already the market, this video is on 40 minutes. So yeah, now we are on Nasdaq. We can easily see that no, this thing is actually flying. I'm expecting a nice reversal. I'm not bearish on gold, but the market is actually overbought, so a reversal can actually work in our favor. Yes, and mostly when the market expects us to think like that, the market might just keep going higher. I know the market, we might actually fear to take our trades around that level, and the market might just continue going even higher. So yeah, I think for now this is enough. I will see you on the next one. So for those who want to be part of the team, just know that once you join lifetime and 12 months, you will get our free indicator. It's not a free indicator because it's actually $60. For those who want that, it's actually $60. You can try our signals for $15 if you want. But thank you very much, guys, for subscribing to the channel. I hope and I will, I promise I will actually keep up and give you the daily analysis, everything that you want to know. So thank you very much. This is Kenzo, Xtrahot Forex. I will see you on the next one. Bye.